Going into the crisis, thanks to a transaction with one of those operators, you had a very clean balance sheet, very little debt, a lot of cash. You've basically kept the balance sheet very conservative and kept quite a lot of cash. Is that just caution, or is that the way you like to operate?
No, I think it's, well, we certainly have a benchmark gearing ratio that we're happy with, and whilst that may be pushing up a little bit at the moment, the cash flows inside the business are incredibly strong. I think we would prefer to have the balance sheet structured in a way that if we see an opportunity, we don't have to go and raise equity to exercise that opportunity, and that's very much where we sit today.
So it's not a function of concern about the environment?
The financial environment? No, it's not.
So what sized opportunity could you actually take advantage of now?
We've probably got, with cash on deposit and undrawn facilities, around about $1 to $1.2 billion that we could draw on now, and that's excluding the cash flow of any target that we acquire.
In the history of acquisition, I think it's something like 82 acquisitions since the MBO. A little bit more now? Okay. There's only been one really big one, the Pt.3 deal. Do you pursue the incremental strategy, or is there the potential there for a big bang transforming type acquisition?
Yeah. Oh, look, I would suggest there have been 3 public companies, so there have been two in Asia and 1 in Australia, so there have been 3 fairly sizable, arguably hostile acquisitions. Oh no, we don't rule that out, absolutely not. One needs to look at where those targets may be housed today. Some are public companies, some are not. So is it small versus big? Is it medium size? Where's the best target? The strategy will determine that, and we would never sort of pull back from an opportunity because it's too big. However, I'm not always sure that the tail wagging the dog is the best way to go either. So I think in global forwarding, where we've done a number of smaller acquisitions in a short space of time, that's been a very effective way to make sure that integration occurs correctly.
You said you'd never pull back from an acquisition because it was too big. That's quite a statement. Is that right? You would. I mean, you would. Is there nothing too big for you, really?
It's got to make strategic sense. And if it does, and buying a company that's 10 times bigger than Toll wouldn't make strategic sense. So one needs to, I guess, bear that comment in being mindful of what we can do and what is sensible for us to do. But no, we wouldn't walk away from an opportunity because we felt we couldn't manage it, or maybe if there are other extenuating circumstances.
Because if you're number 10 in global logistics, then there's 9 others ahead of you.
There are.
That's right. So do you think you'll take over?
But we can get ahead of some of them.
Any of the ones that are bigger than you?
Oh, look, that'd be flagging to the industry, you know, what we're doing. No, I think there are 3 ways of increasing the size of our turnover. One is to acquire smaller businesses and add it to our already $2 billion in global forwarding. The second way is obviously to win more organic growth. And the third way is to look at something that's larger than where we are today. And, you know, I think we haven't ruled anything in or out.